Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis show, where we look at what happened in the market today and then see how we can plan for a better trade tomorrow. The markets were rocking again today. Another all-time high on the Nifty and all eyes set on 18,000. So we're going to look at the September 23rd, 2021 Friday pre-market analysis, where we look at all of these parameters on the charts and we'll do additional analysis and wrap up. Without wasting time, let's get into the price patterns. Don't worry, we'll be seeing the charts in the next slides. So we had a bullish kicker. It's a pro gap. We'll see what bullish kicker is. Okay, so and a wide range green candle formed after the pro gap on the Nifty. We had a bullish edge. That is also a pro gap pattern. A wide range green bullish candle on the Bank Nifty also. And the change in polarity we talked about yesterday bounced and met the targets and excellently worked in Nifty and the Bank Nifty. We'll see how it happened. It was a trending move of 1.2% on the Nifty and 2.2% on the Bank Nifty intraday. The intraday price action was clearly trending higher, low. Bank Nifty at the previous resistance after a wide range candle. Nifty, it's an uncharted all-time high levels. Let's see this. This is what you call a pro gap. See, there is a gap and it's a kicker, bullish kicker. This is also a bull sash pro gap, right? Look at the candle wide range bullishness. Look at that, right? That's what we talked about. This zone where it is at previous resistance was taken as support and the bounce that happened and the bounce met its targets, right? Here, Bank Nifty, this is the support zone. We took the support by two candles and then bounced back, right? Intraday price action clearly trending higher high on both. Right side you see Bank Nifty, left side you see Nifty. Now look at the support resistances. Resistance on the Nifty on the left side, you can see this. The first resistance is going to be 17,850, which is where it hit. Then you have 18,000 rounding number. Then you have 18,250, which is Fibonacci 50% projection. Now downside support, you would have it at 17,350 to 450. That's the first support. Previous swing low, where two times it had taken support, and then if that breaks, it goes to 17,250 to 300. That zone, and then below that 17,000 to 17,150 zone, which also has a full retracement level also, right? So that's the support resistance levels on the Nifty on the left side. The Bank Nifty, now you can see that so Nifty, you can see that these are all-time high levels uncharted. But Bank Nifty, this hit resistance of right 37,600, 37,900 will be the first resistance, and above that you have 38,200, which is Fibonacci projection. And then 38,850, that's all uncharted. If all-time high is broken, it goes to all of those resistances. Downside, you have support at 36,900, 37,200, and then if that is broken, you have the previous swing low where it had taken the support at 36,300 to 36,500. If that is broken, then you have 35,000 to 35,300 supports. Then you have all the supports likewise, right? So the immediate 3-4 supports and resistance of Nifty in the left side and the Bank Nifty in the right side, we have already seen. Hope you make note of that. Momentum divergence. We talked about Nifty is having a bullish reverse divergence, and that has already bounced back. And then this is what downside arrow that you see. Price is moving up. This is coming down. Momentum is coming down. So momentum reverse and met its target is support of this, and it is gone from there. Exceeded the target. That's exactly what happened. Bullish divergence is done with. Now what you have to question is there is a bearish divergence, that is price is going up and then momentum is coming down on the top side, right? So this is bearish and bearish divergence, you have to be cautious, and there's only few number of bars, so you have to be a little cautious, right? So there can be some corrections that may come in. And Bank Nifty, you can see that the momentum is Nifty already is in the momentum. Bank Nifty had slipped slightly, but it has regained the momentum back, right? Now the trend is bullish on the Bank Nifty. Trend is the ADX trend indicator. The strength of that, you can see that it has taken a bend, and today hidden further for it has stopped or moved flat, but you can see that there is a bend after a big up move at 58 kind of line. So that could indicate a reversal, but it happens. It's a lagging indicator and it's very slow, and so it's on a daily time frame. So whether it would again, if this is an actual full reversal or a temporary reversal or a half reversal, we never know. But it indicates that the trend has slowed down. That's it. But it is in the bullish zone. It is again in the bullish zone. Bank Nifty right side, it is also in bullish zone. So you can see that the bullishness has increased today. The ADX DMI positive is rising. DMI positive is rising. So its bullishness is there, but the strength of that, has slightly taken a bend in the last few weeks. That's all. The strength is reduced. Strength is at peak level. This is 35 levels and this is 50 levels. So obviously, but it is clearly bullish indication of the volatility is also a fact. After it hit 17 levels, it's at 16.6 levels here. So IV and the IV is greater than the HIV, so it's good. But the latest yesterday's IV was 30 to 33%, so it might have improved. So it is going to be good if it is moving about 50, 60, 70 levels, right? The IV percentiles. Right, so volatility is at a new regime. Looks like it is not falling back to the 12, 11, 10 that levels, and it is at maintaining the 15, 16 range. If that is the case, means right, it's good for the option sellers. Whenever there is a heavy crush, that happens, right? So open interest analysis, the next that we're going to see left side, you can see Nifty, open interest better, and what is the levels that we see? This highest call rating is C. So remember that this chart, the graph that you're seeing is for the next expiry, which is a monthly expiry, which is September 30th, which need not be fully valid because tomorrow is a Friday and the trading for the next expiry week is going to happen. So the full data may not be there, but since the monthly, it still has difference relevance. So the Nifty, the maximum call rating is seen as 17,000 put rating. I'm sorry. So support seen as 17,000 and the 16,500 is where the put rating is seen after that, and the resistance you can see is 18,500 so far away, and 18,000 is also having a good enough of resistance. So there is going to be resistance near to 18,000 for sure, and the struggle would be to conquer that, right? Mostly, if it is falling, it has a wide range. Now 1.33 it's bullish this year put call ratio, and there's a long build up in the futures open interest data that is showing. Bank Nifty, well, if you see in the right side charts, it's showing that the highest support put rating has happened 37,000 and 37,500 is the next highest put rating area, and resistance seen at 39,000, and after that highest resistance seen at 38,000. So 38,000, whether it's going to retain that or not is question, right? Or would it head it to 39,000? Put call ratio is 1.1, which is bullish, and short covering is all that happened, right? That is sometimes more better than long build up, right? So people have gone short, now reversing their positions and going long. So that can be a big up move again, and that's the reason why today we had such a big, wide range green bullish candle of 2.5% on Bank Nifty, right? So that's open interest analysis levels, compare with the support and the resistance levels that we are seeing before we take the option positions, right? Now, sectoral performance, if you see IT is bullish momentum, again 1% move happened today with the pro gap, with the bullish kicker, right? There is a reverse diversion that is in play, it has met the target already, and now there is a bearish diversion on the daily that is saying that we cautious IT, right? But otherwise momentum, trend, candlesticks, everything is bullish, right? There is a vertical move that is happening, and every day 1%, 2% it's running, right? Divergences, multiple divergences in progress, and each of them meet the target, right? So the metals, next sector, it continued to bounce back. It had fallen 10% earlier, and then it bounced back the last 2 days, and today also made 1.65% of up move today with the pro gap bullish kicker. That is gap up opening. That is what pro gap bullish kicker. So momentum, but continue to be sideways. So we have to wait for the momentum to catch up before we can pick the stocks. In the auto sector, also had shown some reversal indication in moved and regained its momentum, and it's in the bull zones now. 1% move happened today. Auto, right? Auto and metal is coming back. Pharma is red hammer and sideways momentums. We'll have to wait. FMCG is already bullish, but last 2 days it is bearishness. 0.5% of normal seen that candles is seen. Hammer patterns are formed. it's probably consolidating after breakout. So reality is where the real big breakout happens, and 28% in 1 week, less than 1 week of time. The weekly candle showing 28% of breakout in the cup and handle factor. Today was 9% of breakout that happened, right? So the 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 most bullish ones are IT and reality, and metal and auto are catching up. FMCG also is bullish, right? So 3 sectors bullish, 2 sectors catching up. So overall, that is where we have to pick up the stocks. Pick the stocks from the strongest sectors. If IT and reality is doing good, breaking out, pick the stocks only from that, not from anything else. FMCG is good, pick only from that, not from auto, right? The auto's momentum is breaking out, do that. This is institutional participation, right? Look at how much of purchase happened, right? So unfortunately, this data, screenshot has gone wrong. So I'm going to the money control and see what kind of, right? 23rd September, we can see that it's a small buying that happened, 350 crores, but DI is made up for that in thousands. So real buying happened from the domestic institutions today. Yesterday, Fed had anticipated something bad on the Fed event and then sold near to 1,943 crores, right? But DI said bought yesterday also. So today the buying happened from the DI. Both of them bought, but big buying happened from the domestic institution side. So let us get back to the slides, and so that is what institutional participation is. Now dollar has hit the resistance zone once again, and it is wide range reversal from their bearish candle. So dollar is not able to go beyond this very strong resistance zone, right? But same way USD INR currency pair on the left side also, you can see that it is trying to move and hit the channel top, but it is facing resistance even before that. And look at this, oil is at all-time high, 75, 76 kind of levels. Oh, this is not good for the economy, right? It's really bad for the economy. The implications will be there in the markets also very soon. So US dollar currency index. So unfortunately, the gold charts are not seen here. So let me just quickly go to the gold charts here, just because I missed to put in that there, and we will look at that, right? Gold charts. So this is gold chart, right? So you can see that it's a cup and handle on the weekly that is happening, and daily wise today's action was slightly bearish. It could not hold on this resistance zone and seems to be slipping back, right? For some reason it's not. It's a very strong, very solid resistance area, and it's in a channel, cup and handle formation, so it has slipped down for some reason today. That is exactly what happened in the gold, right? Unfortunately I cannot put that. So oil is up, gold is bearish, the currency pair is bearish, dollar also is weak. Actionables here is India Hotels is a good stock. You can see that there is a head and shoulder pattern that is broken out today with a very wide range. This is also an ascending triangle pattern, and this is a clear breakout, and this is a weekly charts that you are seeing there. Bullish momentum and bullish trend is seen in all time frame, short, medium, and high, longer. So this is a good pick. India Hotels breaking out. Larsen and Turbo is another one. The channel is just trending, momentum is very good. So these are 2 picks that you can look at. Now the wrap up is that cautiously bullish is the verdict, right? It just can't help but be bullish, right? But it has to be very cautious. Reason number 1 is because it is a vertical moves, corrections are minor, right? Reason number 1, there is momentum, bearish divergences around the Nifty, right? It's an all-time high, uncharted territory, vertical big moves have happened, so there will be some pullback that can happen, right? But the reason for bullishness is because the Fyers are buying 9 out of the 10 days last year. Market is on steroids, so it's moving vertically just like that. The momentum and trend is all super extreme ultra bullishness. So there is no except there is bearish divergence now seen on the Nifty. Now IT and reality, and FMCG, metal and autos all join the back, and then so there's 4-5 big sectors that have started performing, and markets are always taking small corrections. If you look at the charts, you can see that there is small correction that is happening, very small, right? Very small, not a 10% correction or something like that, but very small. During pullbacks, retracements are happening if you notice the charts properly, right? So it is time for some rest because of this big move that has happened. So don't expect market to perform tomorrow also, right? Still isn't likely offset good moves normally. It may be a 1 or 2 or 3 days, you never know, of consolidation to happen before 18 days taken out. Volatility is a new region, we already said, but V-shape most likely today will happen after long breakout days and trending days and V-shape moves. Last 2-3 days it happened, so we have to be cautious about that. But now it is consolidating, V-shape moves again. When it is trending, they won't happen. So iron fly strategies and the VIX is above the 15 is a good thing to try out. So that's actionable, and stocks you have, levels you know. So hope it helps and to create a plan of your own and trade tomorrow. Happy trading, happy learning. Thank you for watching. Bye.